You saw the change of character. Clean displacement, minor structure broken, the character of the move changed. Everything you were thought said, this is the signal, this is where smart money is shifting direction. So you entered. And price continued straight against you. Then, after stopping you out, price did exactly what you predicted. The reversal happened, the new trend began, the move you identified played out perfectly. Without you, that experience has a name. It is not bad luck. It is not a failed strategy. It is not the market being random. It is what happened when you entered on a question before the market has answered it. By the end of this video, you will understand the precise institutional distinction between change of character and break of structure, not as two separate patterns to memorize but as two sequential phases of a single institutional communication. You will understand why change of character is designed to look like confirmation when it is actually the earliest possible signal, why break of structure is where institutional commitment becomes undeniable, and why most traders who understand both concepts still enter at the wrong moment. And you will understand the three types of break of structure because not every structural breaks carry the same institutional weight. And trading them all the same way is the second most expensive mistake in this concept. Stay with me. I'm Bilal, the disciplined trader. This is episode 4 of the Operator SMC series. The last three episodes build the perception foundation, auction mechanism structure internal versus external. This episode takes the two most commonly misapplied signal in SMC and install them as one readable institutional sequence. Let's get into it. Here is the specific experience most developing traders have with change of character and break of a structure. They learn the concept change of character, the early signal that the trend may be shifting break of a structure. The confirmation that the trend has shifted, they understand the sequence intellectually. Change of character first, break of structure second, early signal followed by confirmation. Then the live market opens and a change of character appears clean with displacement. The market swept low, displaced aggressively upward and broke the previous minor high. The pattern is textbook, the signal is clear, but they have been stop out on change of character entries before. So this time they were not careful, they wait, they look for additional confirmation. Then break of structure appears, the major structure breaks, institutional commitment is visible, now they are certain. They enter the continuation and price retraces deeply, takes their stop, then continues in the direction they predicted. They were right about the direction, they were right about the break of structure, they were right about the continuation. But the entry was at the worst possible moment, right at the peak of displacement, right before the institutional retracement that would given them a far better entry with far less risk. This experience repeats itself across thousands of traders. They learn the concept correctly, they apply them in the wrong sequence, and the market, which moves in a specific algorithmic order that never changes, punishes this sequencing error every single time. The problem is not that traders do not understand change of character and break of structure. The problem is that they understand what each signal looks like. Without understanding what each signal means about where the market is in its institutional sequence, change of character does not mean enter. Change of character means the sequence has begun. Break of structure does not mean enter. Break of structure means the sequence has confirmed, and neither of them tells you where to enter. That answer comes from what happens after break of structure. And that is what most traders miss entirely because they are already in a position from the single that came before it. I entered on a change of character 7 times in 2 weeks. Every single one had displacement. Every single one looked textbook. 5 of them stopped me out before break of structure confirmed. Then ran perfectly without me. I thought I needed better entries. What I needed was to understand that I was treating the opening sentence of a paragraph as the conclusion. Here is what most traders believe about change of character and break of structure. They believe change of character is a reversal signal, that when the character of a move changes, when the market breaks the minor structure against the prevailing trend, that break in the entry, the signal is clear, the displacement is visible, the trade is obvious. And they believe break of structure is confirmation. of what change of character already told them that the major structure break simply validates the entry they already took on the change of character, or give them a second chance to enter if they missed the first signal. Both beliefs are precisely backward. Here is the contradiction that changes everything. Traders treat change of character as confirmation and break of structure as validation. Operator understand change of character is a probability shift and break of structure is the confirmation. That distinction sounds subtle. It is not. Change of character is the market asking a question, break of structure is the market answering it. When change of character appears, the market is communicating that the previous trend may be losing control. That opposing participation appeared with enough force to break minor structure, that the character of the auction changed. This is meaningful information, but it is not confirmation. It is the earliest possible signal that something may be changing, and the word may is doing enormous work in that sentence because most change of character even are noise. Mid-range change of character, low volume change of character inside a large opposing trend, change of character engineered specifically to trigger reversal traders before the original trend resume. The market produces change of character events constantly, and the majority of them are designed to look like this signal you have been waiting for right before they fail. Break of a structure is different. Break of a structure means the dominant campaign successfully defended inventory and expanded auction control beyond a major structural boundary. It means the opposing side could not contain the pressure. It means institutional commitment extended past the point of no return, past the major swing that defined the previous trend direction. That is confirmation, not change of character. And the trader who entered on change of character, who treat the question as the answer, are the ones who get a stop out right before the break of a structure. That would have confirmed everything they believe about the move. In a moment, I am going to walk you through the complete institutional sequence. Sweep, change of character, pullback, break of structure, and the return that gives the operator their entry. But before this sequence, you need to understand that not all break of structure events carry the same institutional weight, because trading every break of structure the same way is the second most expensive mistake in the concept. And understanding the three types changes how you filter structure breaks entirely. A break of structure is not a break of structure. Most traders treat every major structure break as equivalent confirmation. The market broke the swing, the trend confirmed, enter the continuation, but the quality of the break, the displacement behind it, the delivery state that produced it, the liquidity context that preceded it determines whether the break of structure carries genuine institutional commitment or whether it is a trap dressed as confirmation. Three types each communicate something different. This is the highest quality structure break. Large displacement, strong candles bodies, minimum wicks, clean imbalance left behind the move, clear fair value gap visible inside the displacement, no hesitation. The market committed to the new direction with urgency and left behind the evidence of that urgency in the structure itself. When a momentum break of a structure appears, the institutional message is unambiguous. One-sided lost control completely. Opposing liquidity failed, repricing was forced. The trend has not just confirmed, it has declared itself with the kind of aggressive displacement that leaves no room for alternative interpretation. This is where most retail trader gets trapped. Price breaks the major structure but through a wick, not a body. The candle extends beyond the swing and closes back inside. The break is real in the sense that the level was touched. The break is questionable in the same that the market did not accept rising beyond the level. Rejection break of structure events are often engineered. Price moves beyond the structural boundary to collect the stop and breakout orders, clustered there and then reverses. The level broke, but the break of structure was liquidity engineering, not trend confirmation. The trader who entered continuation on the wick break is now trapped in the direction of the liquidity collection rather than the direction of the real move. A rejection break of a structure needs confirmation before it means anything. Acceptance beyond the level, candle bodies building there, continuation that hold. Without that, the break was the manipulation, not the signal. Type 3 Compression break of a structure. This is the most misunderstood type. Price does not break a structure with violence. It grinds through it gradually. successive candles applying pressure, higher closes building above the swing, no signal candles creating the kind of displacement that screams institutional commitment. Compression break-off structure events happen inside accumulation phases before expansion. The market is transferring inventory without revealing intent through aggressive displacement. The break is real. Structural control has shifted, but the delivery is deliberately quiet. This is where the AMD model from earlier in this series connects directly. The compression break-off structure is often the transition from accumulation to the early stage of expansion before the market reveals its direction through momentum. Understanding which type of break-off structure is present before entering continuation changes the entire risk profile of every structural trade you take. Momentum break-off structure, high confidence continuation, rejection break-off structure, weight of acceptance confirmation, compression break-off structure, wait for the expansion displacement that validates the quiet shift. Now the sequence that connects change of character and break of structure into one institutional communication. Institutions do not flip trend instantly. They follow a specific algorithmic order that repeats across every time frame, every market, every session, and understanding that order, not just labeling the event inside it, is what transforms change of character and break of structure from two patterns into one readable campaign. The sequence begins before either signal appears. First, the existing trend creates liquidity. A bearish trend produces obvious swing high, equal lows form, stop clustered deposit below the most recent lows, breakout short accumulation before obvious structure boundaries. The trend has been conditioning participants into predictable positions, and those positions are the fuel the reversal needs to exist. Then the liquidity sweep. Price extends below the obvious low, stop trigger, panic seller enter, breakout shorts pile in, massive sell side flow hits. The market simultaneously the kind of concentrated opposing flow that large buy side participant needs to execute efficiently. And then displacement. Aggressive bullish repricing, urgent commit, the kind of displacement that does not drift, it commit, leaving behind imbalance. Leaving behind trapped short sellers who force exist will fuel the continuation. That displacement breaks the previous minor high. Change of character. The character of the move changed. The market is communicating that something shifted. But this is the question, not the answer. The institutional campaign has begun. The sequence is active, but trend confirmation has not arrived. Now the pullback. Price retraces towards the origin of the displacement. The order block, the fair value gap, the imbalance left behind when the aggressive move began. This pullback is not a threat to the thesis. It is the mechanism institutions returning to mitigate unfilled order, rebalance execution efficiency, and build additional positioning before the campaign continues. The trader who entered on change of character, who treated the question as the answer, is now watching their position retrace toward their stop, their unrealized profit disappearing candle by candle, their conviction weakening with each lower close. The operator who understood the sequence, who recognized change of character as the beginning of the answer, not the answer itself, is watching the pullback with calm recognition. This sequence is completing. The next phase is approaching. Then break of structure. Price pushes through the major previous high, not the minor high that change of character broke. The significant swing that defines the entire bearish trend. The break is aggressive, bodies close beyond the level, displacement continues, acceptance build above the structure boundary. The answer arrived. The market confirmed that what change of character suggested. The trend has shifted, institutional commitment extended past the point of no return. The campaign is now in the expansion phase that every preceding event was building toward. And the operator's entry, the precise, low risk, high probability position, is not at the change of character, not at the break of a structure. It is at the return after break of a structure, the retracement into the origin of the displacement that creates the break of a structure, the order block of fair value gap that institutionals move left behind, the location where the market returned to mitigate inefficiency before continuation the campaign. That is the entry, not the question, not the confirmation, the return after confirmation. Now, I want to show you this complete sequence on a chart because understanding the logic of each phase and seeing the entire campaign as one live institutional sequence are two completely different perception. And once you see the sequence, once you can read the campaign from the swing through the change of character, through the break of a structure, through the return, you stop reacting to signal and start reading the story the market is telling. Picture this on a chart: bearish trend, clear lower high and lower lows. The structure is established. Every trader watching this market is aligned bearish. Their stops sit above the recent swing high. Their positions are pointed lower. Their conviction is built around the trend that has been running for session. Then price dips below the recent swing low briefly, aggressively. Stops trigger below the obvious level. The retail trader who went short on the break of the low are now filled. Panic sellers and more sell side flow. The market has accessed exactly the concentrated liquidity it needed. And then a single bullish displacement candle, large body, aggressive close, almost no overlap with the bearish candle that preceded it. The move is urgent, committed. The displacement leaves a fair value gap visible inside the move. Price escaped through those levels without negotiation. That displacement breaks the previous minor high. Change of character. The trader who has been waiting for the reversal signal sees it. The character changed, displacement appeared, the entry looks obvious. Some trader enter here long with a stop below the sweep low. Price pulls back, not aggressively, controlled retracing towards the fair value gap left by the displacement, toward the order block. The last bearish candle before the bullish move began. The trader who entered on change of character are now watching their position retrace. Their stop is still safe, but the move feels like it is failing. The operator is watching the same candles with completely different perception. The sequence is completing the pullback in the mechanism, not the threat. The market is running to mitigate the imbalance before continuation. The campaign is not over. It has not even confirmed yet. Then price pushes higher again through the pullback, through the previous minor high, and then through the major previous lower high. The significant swing that defined the bearish trend, body closing above it, continuation following, acceptance building above the boundary. The answer arrived. The campaign confirmed. The trend shifted officially. Institutional commitment extended past the point of no return. And now the operator waits, not for confirmation, not for more confirmation, for the return. Price retraces again towards the origin of the break of structure displacement, the order block, the fair value gap, the imbalance, the aggressive move left behind, the location the market must revisit to mitigate execution efficiency before the campaign continues. That is the entry, not the change of character that asked the question, not the break of structure that answered it, the return after the answer that gives the operator the position with the lowest risk and the clearest direction context in the entire sequence. The traders who entered on change of character are either stopped out of watching their position recover. The trader who entered on break of a structure are now in drawdown as price retraces toward their entry. The operator who understood the sequence, who read the campaign rather than reacted to the signals, entered at the optimal movement with full institutional context behind the position, same chart, same candle, same signals, completely different sequence decisions. Change of character is the market asking a question. Break of structure is the market answering it. And the trader who keeps losing are the ones who entered on the question before the answer arrived. Because change of character is not a reversal signal. It is the first communication that the institutional sequence has begun. It is the market telling you something may be changing. It is probability shifting, not confirming, and break of structure is not an entry signal. It is confirmation that the campaign committed. It is the market telling you the answer arrived, the trend shifted, but the optimal position, the one with the best risk, the clearest context, the lowest emotional pressure, is not at the confirmation. It is at the return after the confirmation. The sequence is not two signals. It is one campaign unfolding in a specific institutional order that never changes. Sweep, change of character, pullback, break of structure, return, continuation. Read the campaign, not the signal. The transition from reactive trader to operator happens at a specific moment with the concept. It is not when you learn to wait for break of structure before entering on change of character. That is a rule. Rules get broken under pressure. It happens when you genuinely understand why change of character cannot be the entry. When you see a clean change of character with displacement, feel the certainty building in your nervous system, and instead of feeling the urgency to enter, you feel a different question forming. Where is the break of structure level? What is the major structure that needs to break before the campaign confirms? What is the pullback going to look like before that break? And where after the break of structure will the market return to give me the position that makes this trade worth taking? When those questions replace the urgency of the change of character signals, the experience changes. The change of character no longer creates urgency, it creates attention. The break of structure no longer creates certainty, it creates confirmation. And the return after break of structure, the pullback that most traders experience as drawdown, becomes the movement you were waiting for. This is not a different reaction to the same signal, that is a different read of the same campaign, and the difference between those two things determines where you enter. Three mistakes that prevent this from being a stall. Mistake 1: entering change of character as a reversal signal. The displacement is strong, the minor structure broke, the change of character of the move changed. Everything the trader was thought to look for is present, and the certainty that builds in that moment is exactly what the market needs before the original trend resumes. Change of character is the market asking a question. It is not the answer. The trader who entered on change of character are answering a question the market has not yet confirmed itself. And when the break of structure does not follow immediately, the retracement that precedes it stops them out of a position that was directionally correct but sequentially wrong. Mistake 2: treating all break of structure event as equivalent. A movement break of structure carries a different institutional message than a rejection break of structure formed by a wick that closed back inside the level. Trading them identically produce inconsistent results that feel random because the setup look similar on the surface while carrying completely different level on commitment beneath it. The filter is displacement quality. Before any break of structure means anything, one question: did the market commit to the break, or did it extend into the level and retreat? Mistake 3: entering at break of structure and calling the mitigation a failure. The break of structure forms, the trader enter continuation, price retraces into the displacement origin, the position goes into drawdown, conviction collapses, they exit. Price immediately continues in the direction they predicted. They were not in a failed trade. They were in a trade entered one phase too early. The mitigation is not the sequence failing, it is the sequence completing. The return after break of structure is the entry the entire preceding campaign was building toward. Exiting during it is exciting at the worst possible moment inside a sequence that was working exactly as designed. Here is what I want you to do with your chart this week. Find 5 complete sequences, not 5 change of character events, not 5 break of structure. 5 complete sequence. Sweep through change of character through, pull back through, break of structure through, the return. For each sequence, ask 3 questions. What type of break of structure appeared? Momentum, rejection, or compression? What does that type communicate about the institutional commitment behind this shift? Would the entry at the change of character have survived the pullback that followed? And where specifically was the optimal return entry after the break of structure? You are not looking for trades, you are training sequence recognition. 5 complete sequence mapped in full. Then open a live chart and read the next one while it is forming. Change of character is the question, break of structure is the answer, and the entry, the real entry, is what comes after the answer. The sequence never changes. Sweep, change of character, pullback, break of structure, return, continuation. Read the campaign, not the signal. If this is the work you are doing, stay on this channel. I only post when there is something worth teaching.